August 4, 2025. A date that will be remembered as a turning point in the story of American industry. Silence grips Boeing's massive plants in Everett and North Charleston. Not the silence of accomplishment, but the heavy hush of economic crisis and uncertainty. Boeing, once the pride of American industry and a global leader in aviation, has halted production on its flagship airliners for the first time in decades. This isn't due to a technical glitch or a labor strike, but a direct result of a deepening and escalating trade war with China, America's largest trading partner. The shockwaves reach far beyond Boeing's gates, shaking the U.S. economy, rattling Wall Street, and sending tremors through global geopolitics. China's abrupt cancellation of a multi-billion-dollar aircraft order has cut off a vital revenue stream, exposing America's vulnerability in a deeply connected world where economic decisions have global consequences. For decades, Boeing was America's top exporter and a symbol of industrial might, innovation, and national pride. Now its silent factories stand as a stark warning, a symbol of how quickly fortunes can change. The move is a calculated strike by Beijing, weaponizing its market power to inflict maximum pain on Washington and to send a message to the world. This is more than a corporate setback. It's a turning point in a conflict years in the making, with roots in policy, politics, and global ambition. Tariffs and counter-tariffs have moved from policy to reality, leaving tens of thousands of workers and their families facing an uncertain future. The suspension of Boeing's production is a headline for a much larger story: the shifting balance of global power, the fragility of supply chains, and the risks of economic interdependence. The question now looms larger than ever: how did we get here, and what comes next for America, its workers, and the world? The implications reach far beyond aerospace, forcing a national reckoning about the future of American manufacturing, competitiveness, and economic security. The silence at Boeing is a loud warning, a call to understand the high-stakes forces at play, and a challenge to rethink the nation's path forward. The roots of this crisis stretch back nearly a decade to a time when the world's two largest economies began to drift apart. It all began with the first US-China tariff battles of the late 2010s, a period that would set the stage for years of economic confrontation. Washington imposed sweeping tariffs, citing concerns over intellectual property theft and persistent trade deficits that many believed threatened American industry. Beijing retaliated in kind, targeting American agriculture and sending shockwaves through rural communities across the United States. Years of economic sparring followed, with both sides digging in and no lasting resolution in sight. Markets fluctuated, and uncertainty became the new normal. By the early 2020s, the US moved to decouple key sectors from China, expanding restrictions on technology, semiconductors, and critical infrastructure. Beijing saw these moves as a direct attempt to stifle its rise, escalating the conflict beyond tariffs to a full-blown contest of industrial policy and national ambition. In late 2024, the US banned Chinese components and government projects and imposed a staggering 100% tariff on Chinese electric vehicles, aiming to protect domestic industries. China warned of firm countermeasures, and diplomatic channels froze, leaving both sides at an impasse. The tipping point came in spring 2025, when the US finalized a new round of tariffs and expanded technology restrictions, sending shockwaves through global markets. China responded not with more tariffs, but by canceling an $80 billion Boeing order, a direct hit to a symbol of American power and prestige. The move targeted a sector with deep supply chains and enormous political influence, ensuring the impact would be felt far beyond the factory floor. Announced in July 2025, the cancellation forced Boeing to suspend production, putting thousands of jobs at risk and rattling the entire aerospace industry. This was the most severe consequence of the trade war yet, a moment that made the costs impossible to ignore. The escalation was no accident. It was the result of years of unresolved disputes, strategic gambles, and mounting mistrust on both sides. The Boeing crisis is the clearest sign yet of how far the conflict has spiraled, with consequences rippling across industries and borders. The world is now watching the fallout, as governments and businesses brace for what comes next. The trade war's costs are no longer abstract. They're painfully real, affecting livelihoods, communities, and the future of global trade. China's strike on Boeing was a calculated move, not a random act. Boeing is America's largest exporter and a bellwether for US manufacturing. By targeting Boeing, Beijing aimed to pressure US politicians and financial markets where it hurts most. The move exploits a key vulnerability. China is Boeing's biggest growth market with no easy replacement. By canceling orders, China can pivot to Airbus, strengthening ties with Europe and driving a wedge between Western allies. The message is clear: siding with US protectionism has consequences. Losing access to China isn't a temporary setback for Boeing, it's a long-term catastrophe. Experts long warned that a trade rupture could cripple Boeing against Airbus. Now that warning is reality. Domestically, the move rallies Chinese nationalism, showing strength against foreign pressure. State media frames it as defending national interests, bolstering support for Beijing's strategy. The targeting of Boeing is both an international signal and a domestic rallying cry. Boeing's production halt triggered a financial crisis. Its order backlog decimated, stock price down 30%, and billions lost. The company slashed spending, froze hiring, and drew down credit to survive. Up to 40,000 jobs are at immediate risk, with entire communities in Everett and North Charleston facing economic devastation. The pain ripples through Boeing's 11,000 suppliers nationwide, threatening thousands more jobs. Major suppliers like Spirit AeroSystems have already announced layoffs. Meanwhile, Airbus stands ready to absorb the canceled orders, threatening Boeing's market position for decades. The crisis could permanently shift the balance of power in global aviation. Boeing's suspension sends shockwaves through the entire U.S. economy, reaching far beyond the factory floor and into the heart of American industry. As America's top exporter, Boeing's halt widens the trade deficit, putting additional pressure on the dollar and fueling inflation that touches every household and business. The labor market feels the pain. Layoffs ripple outward from Boeing to thousands of suppliers, logistics companies, hospitality workers, and even the finance sector, threatening job security across multiple industries. The Congressional Budget Office warns that a 6-month halt could shave 0.3% off U.S. GDP growth, a blow that could slow the nation's economic momentum. Investor confidence is shaken, with market volatility surging and a sharp pullback from industrial stocks, as uncertainty clouds the outlook for the sector. The crisis exposes a critical vulnerability: America's over-reliance on a single corporate giant for jobs, exports, and innovation. Policymakers now face tough questions about how to diversify the manufacturing base, reduce risk, and strengthen economic resilience for the future. The Boeing crisis is also a barometer for U.S.-China relations, amplifying economic anxiety and raising concerns about America's position in global trade. The event is likely to spark a national debate on industrial resilience, supply chain security, and the need for strategic planning. The pain is immediate, but the lessons learned could shape economic policy and industrial strategy for years to come. America's economic stability is now tied to the fate of one company, highlighting the risks of corporate dependency. The need for a more robust, diversified industrial strategy has never been clearer as leaders seek to protect the nation's future. The Boeing shock is forcing a reckoning, prompting reflection on how to build a stronger, more adaptable economy. The stakes are national and global as the world watches how America responds to this pivotal moment. Boeing's crisis is global. Its supply chain spans dozens of countries, now all feeling the shock. Japanese and European partners face slowdowns and layoffs as orders freeze. The just-in-time manufacturing model, once praised for efficiency, is now exposed as fragile. Suppliers are left with undeliverable parts and mounting uncertainty. The World Trade Organization warns the disruption could chill global trade and push countries toward protectionism. Airlines worldwide face delays and higher costs, with consumers likely to pay more. The crisis is a case study in the weaponization of economic interdependence. The ripple effects may accelerate the fracturing of the global economy into rival blocs. The US and China are locked in a high-stakes chess match. America's strategy: slow China's tech rise, reshore manufacturing, and use tariffs and export controls to maintain an edge. But this approach risks severe retaliation, as the Boeing crisis shows. Critics say Washington underestimated China's resolve and ability to strike back. China's strategy is asymmetric, targeting specific US vulnerabilities like Boeing to create political pressure. Instead of broad tariffs, Beijing delivers surgical shocks to high-profile industries. China is also working to reduce its own dependencies, investing in domestic tech and making itself indispensable in global supply chains. The dual approach: withstand US pressure while increasing leverage over the world economy. The Boeing crisis reveals the risks of miscalculation on both sides. The balance of power is shifting, and the rivalry is only intensifying. The Boeing crisis may reshape the global order for decades. Economic fragmentation is accelerating with supply chains splitting into US and China-led blocs. This means higher costs, less efficiency, and slower growth worldwide. America's reliance on corporate giants like Boeing is now a strategic weakness. The crisis could spur new industrial policies and public investment, but protectionism remains a risk. International trade rules are eroding, with the WTO sidelined and unilateral action on the rise. Smaller nations may suffer most as the rules-based order breaks down. Above all, trust between the US and China is eroding, making cooperation on global challenges harder. The choices made now will shape whether this rivalry is managed or spirals out of control. Boeing's suspension is more than a corporate crisis. It's a turning point in the US-China rivalry. China's calculated strike exposed America's vulnerabilities and sent shockwaves through the global economy. The crisis is a warning. Economic interdependence can be weaponized overnight. The challenge now is to de-escalate and redefine the rules of engagement for a new era. The world watches as policymakers weigh their next moves. The stakes: global stability, prosperity, and the future of international order. In this new era, can rival powers compete without mutual destruction? Or will the silence at Boeing become the new normal?